we discussed a lot that there are bottlenecks which are related to regulation. So some governments ban ICOs and even cryptocurrencies, and some governments allow companies to accept cryptocurrencies on their balance sheet, and so they make the cryptocurrencies official money. And what do you think? What we can do to kind of resolve, and what are the bottlenecks? What are the regulators' concern, and how we can resolve this? Who wants to start?
I'll have a go.
Yes, please.
So my name is Nick Duetto. I run the Australian Digital Commerce Association. So we're the industry body in Australia that represents blockchain companies. And probably about 3 years ago,
you should hear your voice. It should go through bureaucrats and
how's that? Is it better?
It's like bullets into heads.
Is that better? Can you hear me now? So there's a fundamental paradox that's sitting at the heart of our blockchain revolution. Blockchain as a technology is this incredibly powerful trust engine. And yet, unfortunately, a lot of that innovation is in the hands of people who can't be trusted. And that's a real problem that the industry itself needs to find a solution for. I came across this for the first time about 3 years ago when I started to get into the whole space. And I was at a conference in Australia, and as a blockchain innovator who was a little bit frustrated at the fact that the regulators weren't listening to him. And he said on stage, "Get out of my way. We're just going to ignore you. We're going to go around you." And there were regulators in the room, and I thought to myself, this is not a good plan. So the key issue is, how do we work with regulators to help them become aware of the potential of this technology? And how do we help them understand that the policy goals that they are trying to achieve can actually be delivered in a better way than using their current models? And the approach we took in Australia, and I know a number of other countries have done that too, has been to look at self-regulatory standards. So we actually said, look, you know what, the regulators are moving too slow. They're always going to move slow. It's the nature of a regulator. So let's create a self-regulatory standard first. And we did that in the anti-money laundering space for crypto. And by going out there with a self-regulatory standard, we were actually able to win a lot of trust from the regulators. And now, and I think most of you might be aware, Australia is one of the few countries in the world that has now got formal regulation from an AML perspective for crypto. We are the trusted advisor standing side by side with the regulator in helping them develop the new rules. And that's the place you want to be. Okay? So, and I'll finish with this point. I think there's two places industry needs to aim. One is working with the regulators to set minimum standards, but also working as a community to go above that and define best practice standards and strive for those. And that's, if we can do that right, we will actually accelerate the implementation of blockchain.
Yeah, I want to take a moment saying that.
Yeah, so I feel that we are kind of more government people now. They're more disciplined. Nobody wants to talk if nobody asks, right? Okay, so this is a big bottleneck. Regulators and governments fear that there will be many unhappy people who bought something in expected profit, but they lose money, right? What are we gonna do with this?
Actually, I would like to speak. Can someone show the slides that I prepared?
Okay, let's put Cecilia's slides. Yeah, and make mics louder a bit.
Can you fast forward it? The second. Okay. Thank you. Yeah. So I represent Crypto Valley Association. I drafted the Crypto Valley Code of Conduct. There's a general code of conduct, and there's a code of conduct for decentralized ecosystems. And what we've done is we've gone to a risk-based approach. We identified 5 different risk and compliance areas. So AML CTF, which is what you have addressed, that's very much on the agenda. Then consumer protection. So when you have many contributors or investors who may have a different expectation of the project, yeah, we recommend that there are certain disclosures that are made not only within the terms and conditions, but also in the web interface and the white paper. Then to your question about the balance sheet, we've also called for truthful books and records, that the actual profit loss or balance sheet, if there are any disclosures to the community, that they're truthful, that they're not manipulated, they're not fraudulent, yeah, and that they're actually audited as well. We're calling for that. We're also calling for proper business conduct, that they behave themselves within the ecosystem, that they also don't slander other projects, because I noticed that within the social media channels, there's a lot of back and forth, malicious language, or, and then also insider trading, which I think the pump and dump, that's something that Valentin, when I first met you, you mentioned as a big compliance area. So those are at least just 5 of the areas. We have another working group that's dealing with security, and we've been in dialogue with FINMA since October of last year. So the both codes of conduct have actually been vetted, been sent to the FinTech team in FINMA. They actually unofficially welcome it. And they actually sent me an email saying that they really like it. So for Crypto Valley, we also follow the Australian model, and also with Blockchain Compliance Alliance, we work hand in hand with the regulator.
Thank you. Thank you. So who wants to it?
Yeah, my name is Joshua Hawley. I'm based in Mauritius. I founded the Blockchain Advisory Foundation in Mauritius. And we look at it from a multi-view standpoint. One is from the technology perspective, where blockchains in relationship to QC in particular, and analyzing the efficiency of the blockchain relative to hacks, et cetera, and then applying those to fintech networks and fintech ecosystems. Then from the other side, we look at ICO and fintech regulation in general, and we've analyzed, as an American citizen originally, I'm an expat now, I'm a resident of Mauritius, but as an American citizen, I go back to the United States a lot for much of the reference. And we look at what Delaware is doing with their blockchain initiative. In 2010, there was a case with Dole that Dole was going private, and actually the Chancellor of Delaware in the 2013 ruling to that case recommended that large corporations look at taking their shares onto the blockchain. So from the standpoint of self-regulation versus government regulation, I think it's complementary in the sense that we can actually start using these ledger systems, these distributed ledger systems, to incorporate and self-regulate and allow governments to identify the ledger that's taking place on the blockchain. So for example, as Cecilia mentioned, these audits, this can be done on blockchain, and this can be publicly available. These are the types of solution that blockchain promises. So I think collectively there's certain models that are existent within, like for example, Wyoming. They have the Bitcoin initiative actually in legislature right now, which looks at cryptocurrencies as a third asset class. So they're defining it by its use case specific as a cryptocurrency. So it's not a physical currency as in a fiat currency, it's a new asset class. So I think we can start to move along in that direction when it comes to cryptocurrencies, and then identifying also other models for existing legacy systems. So part of my thesis is the integration of legacy systems with blockchain technology. And you know, a lot of this already exists in the legacy environment. So it's a matter of simply compiling and bringing it together to where we have sort of this consensual framework that we can then present to governments and institutions, enterprise, et cetera.
Yeah, who's next?
Well, hello? Okay. I think the interesting thing is that half a year ago, when we holding such panel, and the question we discussed is whether we should be regulation. And now we are talking about how we should do regulation. That is, I think it's a big step forward. And I think if we talk about regulation, we need to understand why there should be a regulation. I think there are basic two reasons. The first one is the blockchain and ICO thing is a new thing, and it bring new ecosystem and will share a lot of market from the traditional finance institution. So the government will not allow such a new thing bomb without regulation go out of control. I think that is one very important reason to regulation. Another reason is that for us, we are doing project. Although the project may be in the form of a community, but the company, the people, they are citizens. They cannot get away from the traditional identity and any other system. So we must accept the regulation so that we can communicate with the traditional ecosystem. So that's two reasons. And so we need to do regulation, but how we should do, I think there should talk about the effectiveness and how we understand this new business. And I think for new blockchain thing and the traditional finance, they have similarities. For the basic things, most about crime. So is there any money laundering? Is there any cheating, such things? I think this is the first thing the government should regulate to make sure people will not do a lot of mistake things in this area. But for the detail, how to deal with little step thing, I think that should be done by the association of the projects so that they can self-regulate, because they know everything about the process, which the government, the researchers, they don't understand. Maybe understand, but maybe a little. So I strongly agree with your opinion. There should be two levels. The first level is a basic level, which defines the minimum standards. Make sure people will not go criminal. Yeah, and then the other standard, that is we get a unit to make sure we can do this business for a long time. We can survive. So I think with these two standards combined together, we will define a good way to regulation.
Thank you.
Hi.
Lee, please. Yep.
Yes, sure. My name is Samson Lee. I'm the founder and CEO of Constreet. We are ecosystem enabler, so we do ICO advisory from all the fundraising from private sale to public sale. We also running a crypto fund and a crypto investment club. We also launching our white label crypto exchange platform, working with different partners in different countries to enable the whole ecosystem. I'm also chairman of the Greater Bay Area TechFin Association in China, co-founder of Hong Kong Blockchain Center, and co-founder of the Ethereum community in South China. So a very great pleasure to be here. To me, regulation is a good thing. It's all about fair game. Fair game with a clear rule of games for different stakeholders, right? For the entrepreneur, for the smaller investor and for the government. Right? But because this industry is moving so fast, right, as you know, there's no way existing regulation can be satisfied with what we're doing today, right? I'm in the middle of the roadshow when China announced the ban of ICO last September in China. It's quite an experience, right? Because it's moving so fast in China at the time, and it takes time to come up with regulation, as the other speaker mentioned. So the only way they have to do it is to stop. Of course, there's other options in other countries as well. But with a clear rules of the games is actually good because it set clarity. What can be done, what cannot be done, right? It's actually help to scalable, the scalability, right? Because now being an entrepreneur, I'm from Hong Kong. Hong Kong is in the middle, right? Is part of China, but it's also freedom with a different legal system. So legally, we are legally allowed to do ICO, right? But because of China banned ICO, so we are very cautious. But because of lacking of very clear regulation, so people often ask, can we do this? Can we do that? There's no clear guideline, right? So it will be good to have a better guideline so the entrepreneur can actually develop the business plan according to the regulation in a fully compliant way. Right? And on the other hand, it is very good because, again, back to the fair game, right? Because the entrepreneur, they make the company, in the ICO, they issue the tokens, and a lot of the smaller investors, they are actually at the mercy of the company when they buy a token. It's so difficult now, first of all, the due diligence, just look at the white paper, right? Whether those people are real, right? Even the team is real when they invest, whether the company is really going to do what they promised to do after they raise fund. Right? There's no regulation, there's no control. So there are some kind of regulation needs there to protect the smaller investor. But of course, it takes time to make the regulation. So I think from now until a clear regulation, it is very important as well for the industry to have some best practice of self-governance, right? So that we want to make sure the industry wouldn't have any major problem, right? Before the real optimal regulation comes.
Great, great, thank you. So to sum up, the bottleneck, which is acceptance of crypto by legal entities, companies, retail and corporate, can be resolved if we kind of mobilize those who benefit from it and to ask governments to do so. And also, if we solve regulatory concerns such as AML and taxation, this could help as well. And in order to do so, perhaps we need a kind of coalition of exchanges which can make transparent accounts for taxation and AML, and perhaps enforce some self-regulatory rules which will prevent massive kind of discouragement of contributors who didn't know what they bought. Yeah.
If I could say, I think that's stage one of the plan. So all of this work that we've seen around the world to create codes of conduct and self-regulatory standards, I think that's really important. But actually, it's only stage one because blockchain technology itself is the perfect instrument to improve the regulatory process, right? So it's not about getting acceptance from regulators to be able to operate sort of to the side of the current model. It's actually to convince them that the current model can be changed and replaced with a blockchain-based instrument where you have auditability, where you have transparency, where you have governance rules that are built into a blockchain. And so we need to start to move to the situation where our actual applications are using blockchain technology to support those sort of regulatory goals. And that is going to mean that, you know, conventional industry will start to respond. Conventional markets will start to respond. And that's when we're going to change the world.
I completely agree with that. And, you know, and I think that the situation is actually complicated, just like a Facebook relationship. And when I say that is because, you know, we all think that blockchain, this panacea technology will fix everything, right? But currently we're at the very early beginning, at the very early stages, right? So we know that blockchain will bring transparency, will bring that kind of level of sophistication, will allow us to kind of regulate in different ways, right? But right now, we don't have that, unfortunately. We're still working towards creating the technology, right? I go through 350 plus white papers every month, and sometimes I feel like there are people that are really trying to build YouTube when it was 1992, when you had a dial-up, you know, with that little sound, the 56K kind of thing. So there's a lot of aspirations, a lot of dreams, but I do think that regulation is important. Even more so, I do think that self-regulation is important. I think Valentin was actually alluding to it, and some of our panelists, in the fact that we don't want the SEC, CFTC, FINRA, IRS, and the guys to come down on hard and crush down with the iron fist, right? We know the ICO is a great model to create new capital markets. We know that blockchain is going to be a breakthrough technology, it already is. So self-regulation is important because we want to show these regulators that we are capable to run an industry in a proper way until we're going to have some proper regulations in place. But the point is, and I think Cecilia also alluded to it, is that don't do this in silos, right? Let's not huddle up in one room and do it ourselves. Let's have the regulators, the governments, entities, institutions be part of that conversations. Initiate a conversations, right? When you have communications, you have dialogue, you kind of start building things, right? So to me, the point of having that self-regulatory framework, you know, with some sort of like input from regulators, governors, to me, that's the most critical things that we can do in the short term right now.
I have a couple.
Thank you. Okay.
I just want to reply to that. On the Swiss level, FINMA has come back to me, and this is an unofficial comment that I'm now communicating. They have told us, we would like to see you set up an SRO, crypto only, in Crypto Valley Zug. They're fully supportive of our initiative. They're 100% behind us, and there are ongoing discussions now with the executive committee or the board of directors of the CVA about whether they're going to do that, how are they going to fund that, and the process of getting that through, because it's a 6-month-long process, and there's a lot of work to be done. I have another comment just about the benefits of self-regulation, because it does take 2 or 3 years to actually introduce legislation. One of the things that I'm seeing is a lot of volatility in the market because we have tail risks, right? Either in hacks of certain Japanese cryptocurrency exchanges or certain enforcements. And I think if you have a properly functioning self-regulation in a particular market or jurisdiction, you actually decrease the number of tail risks or compliance cases. And that also helps with the market volatility. I saw that also from a compliance perspective, because I used to manage like billions of dollars of assets from a trading perspective in some of the largest financial institutions. And whenever you saw that a particular listed company had compliance problems, their share prices would drop, right? And I'm seeing the same patterns again in the crypto world, right? So I think self-regulation can actually help sort of smooth it out. There are pain points at the very beginning, like from a short-term perspective, but I think from a long-term perspective and from a sustainable perspective, to give legitimacy to this new asset class, like crypto assets, we need to have it.